always think about that. What am I missing, or what could go wrong? And these type of companies, they are not really high growth companies. So you really almost have to think, what if there's no growth in the company and there's no improvement in the business? How much cash am I getting in my pockets in the coming 8 or 9 years? And does the company have any natural inflation hedge? And I believe if there is a huge deleveraging going on, people have to sell something to deleverage. So they may be selling their real estate, they may be selling ABS or other financial instruments. But of course some of the leveraging is also raising money out of the stock market and paying off the debt. So in Europe, if you, in the banks, 1 trillion in capital and 22 trillion in assets, there's just a lot of debt to be paid down. So I believe that there's a very little chance that the multiples will increase in the coming years, especially if you get higher interest rates. So by only paying 10 times what you believe is the reasonable proxy of the cash, you are kind of limiting your risk. And that's why I don't want to pay like 15 or 16 times multiple for a company that is growing more, because I don't want to pay for the growth. And that's something I think Buffett also said one time, that the growth is really a component of value. It's not that you are either you are a value investor or you're a growth investor. That's nonsense. The growth is just the component of value, and you may also, if there's very little growth, it may have some value, but then you pay a very low price. For example, if you look at a company like Microsoft, I don't have any specific insight in that business, but it seems a business that is almost valued like a run-off business. So even if there's no growth anymore, or even if cash flows are declining in the coming years, you still make money because you get a lot of cash is returned via buybacks or at reasonable prices or dividends. But I think Tesco, and Sligo, Smith and Nephew, I think the earnings yields are fair, but not really attractive, and they are not so expensive. So I think in this environment where you want to just protect your capital, they are fine investments here, but not great investments. So it's waiting again for a dip in the market, and every day I hope that markets decline by 20% or 30%, and that you can buy some of these companies.